But what I am confident in saying is when Bitcoin is $1 million a coin, which I think is coming by, even though it seems unlikely right now, given the current price action, I think it's still coming by, let's say, 2033 or so in that time frame. So within the next 10 years. I think by the time that happens, almost every government will have some direct or indirect exposure to the asset, and it will be viewed as a common, strategic reserve type of asset across the world. But I think Bitcoin has tremendous long-term advantages over gold. Again, the supply issuance for Bitcoin is completely algorithmic. The supply issuance for gold is largely predicated on how profitable it is to mine gold.
Yeah.
And so as the gold price goes up, they mine more gold. And so the cure for higher gold prices is higher gold prices, right? Whereas there's no cure for higher Bitcoin prices because there's no way to accelerate the amount of Bitcoin mining you can do just based on your desire to mine more Bitcoin. There's no other asset, in my view, in human history that looks quite like that. So yeah, over 10, 15, 20 years, I have zero concern about Bitcoin's monetization.
When markets obsess over noise and narratives, Mike Alfred cuts through the confusion with a simple truth. Bitcoin's destiny is written in its code, not in the daily charts. Mike Alfred's perspective on Bitcoin reflects a level of macro awareness that many market participants simply overlook, and from my standpoint, his analysis holds weight precisely because it rejects the easy narratives most investors cling to. He repeatedly stresses that no one truly understands short-term price action in complex markets, and I agree. Bitcoin's recent climb from $16,000 to six-figure territory unfolded in one of the most restrictive liquidity environments in decades, something few acknowledge. Alfred's insistence that Bitcoin's supply is fixed while demand alone drives volatility is particularly relevant now, as the asset approaches a historic milestone. With 95% of its total supply already mined, only 1.05 million BTC remain to be issued over the next century. That scarcity is not a marketing slogan. It's a structural feature no other asset, especially gold, can replicate. Where I align most with Alfred is in his view that the current cycle isn't broken, it's elongated. The combination of ETF inflows, treasury adoption, AI-driven energy demand, and pending fiscal stimulus creates a backdrop where Bitcoin's upside may simply be deferred, not canceled. From my analysis, Alfred's long-term conviction isn't blind optimism. It's a rational assessment of a monetary asset entering the final phase of predictable, diminishing issuance. If this insight hit you harder than Bitcoin's halvings, go ahead, leave a comment, share it with your crew, and smash that subscribe button for more market truth bombs.
Look, I think everybody's looking for narratives. And so people tend to latch onto a narrative and apply it sort of retroactively to what's happening. These are highly complex systems that are impossible for any one person to know. So anyone who claims they know exactly why XYZ price action is happening in any asset, they're usually full of it. I speculate like anyone else. I'm pretty good at speculation relative to the average person, but I also will candidly admit when I don't know something or I haven't studied it. In the Bitcoin case, like just look at Ethereum. It's down 7% for the year. Solana's down 25% or something for the year. The entire crypto ecosystem has been starved. I think you can look back now and say this has actually been a really tough liquidity environment. Like Bitcoin's gone from 16,000 at the lows, right, to 126 in an environment that was somewhat difficult with the Fed having raised rates 500 basis points in a very short period and sort of crushing a lot of markets temporarily in 22. And I still think monetary policy is sort of restrictive. I still think global liquidity is somewhat restricted. I think Trump's policies, candidly, have created a lot of confusion. I voted for him. So I didn't vote for him last time and I voted for him this time. I'm an independent voter, so I reserve the right to change my mind. In fact, I don't think you can actually be a great investor if you're overly political and you invest around that. So I intentionally try to change my mind as it relates to politics and don't get sucked into it. But I think the tariffs, the immigration policy, right, some of the stuff that's happening with the Fed, I think all that is contributing. And what the thing to remember about Bitcoin is the supply side we always know. So as long as the protocol continues to work, the supply is going to asymptotically, right, the new supply issuance is going to asymptotically approach zero over the next 100 plus years. And so the only thing that really drives things is demand. And so if demand is restricted for some reason because of liquidity or because of alternatives, that could be a temporary drag on the price. But at some point, if Bitcoin's actually the best money and it's the thing that people should accumulate and it's the best risk-adjusted asset, I lose zero sleep about whether or not that's going to happen. I just ask the question of when. And I continue to think it's probably somewhat imminent. Like everyone's flipped really bearish right now and everybody has a narrative for why. And I think it could just wake up and absolutely rip in the next 6 weeks or the next 8 weeks. And hey, I might be wrong. I'm not positioning my whole life on that thesis. But anyone who says it can't do that doesn't know Bitcoin. I haven't been around very long because it does do this quite a bit. It makes you think it's dead, right? It posts a death cross on the chart and everyone's screaming that it's over and this is the end of Bitcoin. And then it bounces and just rips people's faces off in like 2-3 months. XYZ company bought it and the US government did X. I think the government reopening historically has been pretty nicely correlated with up movements in Bitcoin that just happen. It takes a couple weeks to get the liquidity spigot flowing. I posted a tweet about this and people are like, oh, it didn't go up the day after yesterday was the first day and the Bitcoin went down. You must be wrong. And I'm like, oh my God, you guys have the attention spans of a 3-year-old. Like my daughter has a higher attention span than some of these people, right? Like give it at least a week or two to get the paychecks going again. He's going to launch some stimulus, right? We're going into a lower rate, high fiscal stimulus environment with high fiscal deficits, and people don't think Bitcoin's going to go up. Like, yeah, it's scary and annoying to some people with a short attention span that Bitcoin has not behaved exactly as people expected at the bottom of the cycle. But everything's changed with the ETF and with the treasury companies, right? And the current liquidity backdrop and the macro. So we just are in an elongated cycle. So we may still see parabolic price movement this cycle. It just may not happen until 3, 4, 5, 6 months from now, or even this time next year. I see a scenario where this bull market, if you overlay it with the AI CapEx spend cycle, which I'm extremely bullish on, there's a lot of, every 6 months they turn bearish on this and then they bounce right back because AI is a 20-year theme. It's sort of like being bearish on the internet. Like there were people who were bearish on the internet for the last 25 years, but they all made less money than people who were long, right? Long Bitcoin, long AI, easiest trades of your lifetime. You just hold them in large size for a decade. And we're at year 2 or 3 of a major uptick in AI CapEx. You're not going to see a huge recession with the biggest companies, the largest companies in human history with the highest cash flow, pouring money into AI. And remember, AI overlaps with Bitcoin, both in terms of agents, AI agents wanting to use some sort of algorithmic asset, and also in terms of the energy layer, AI and Bitcoin are competing for power at the data center level. So if AI can continue to rip, and I think it will, then Bitcoin's going to struggle to go down for very long. It can go down for a few more weeks or something, but it's probably not going to stay down that long.
As governments gradually wake up to Bitcoin's potential, Mike Alfred reveals why the next decade could redefine its role as the world's premier digital reserve asset. Analyzing Mike Alfred's perspective, it's clear that Bitcoin is entering a transformative phase where government recognition is slowly catching up with market realities. Alfred points out that before Trump, governmental acknowledgement of Bitcoin seemed almost impossible, yet recent progress shows a shift toward acceptance. He suggests that external pressures, such as other countries taking early action, may push the US to engage more directly, potentially catalyzing adoption in the near future. From an investor's viewpoint, his projection of Bitcoin reaching $1 million by 2033, with a likely $200,000 cycle high by 2025, frames the asset as a long-duration strategic reserve. Alfred's emphasis on Bitcoin's algorithmic, fixed supply versus gold's elastic mining-driven supply highlights why scarcity and monetization potential make it unique. His advice to buy amounts one can hold indefinitely resonates, emphasizing emotional discipline and avoiding forced liquidation. He also identifies emerging sectors like DeFi, NFTs, and prediction markets as underappreciated opportunities, particularly as regulation evolves. The inclusion of MicroStrategy strategy, leveraging long-term convertible debt to gain Bitcoin exposure without immediate liquidation risk, illustrates how institutional players are positioning for upside while managing balance sheet exposure. Overall, Alfred portrays a slower, ladder-like crypto cycle, offering strategic accumulation opportunities amidst volatility. Let's get back to the interview.
Impossible that the government would even acknowledge Bitcoin before Trump, right? And now I think we've made quite a bit of progress in a short period of time. It's not as much as some of the maxis would have wanted. We're not buying Bitcoin in the open market quite yet, but my suspicion is that'll happen when there's enough pressure externally, meaning once the US government recognizes that others are taking action before them, that'll probably catalyze additional action in the future. Predicting that is sort of a fool's errand, in my opinion. It's like really hard to get that correct. But what I am confident in saying is when Bitcoin is $1 million a coin, which I think is coming by, even though it seems unlikely right now, given the current price action, I think it's still coming by, let's say, 2033 or so in that time frame. So within the next 10 years. I think by the time that happens, almost every government will have some direct or indirect exposure to the asset, and it will be viewed as a common, strategic reserve type of asset across the world. So, I mean, I think it'll be viewed as the most pristine neutral reserve asset, where if you want to hold an asset that can't be easily seized, right? Like if you think, forget about what you believe about Russia, Ukraine, but when Russia invaded Ukraine, the US and the allies just sort of seized as many of the Russian dollar deposits in Europe as they could. And so again, irrespective of what your view is on the rightness or wrongness of that decision from a political standpoint, the interesting thing is that was a signal to all governments that they need to have more assets. And by the way, they've been buying a lot of gold.
Yeah.
Right. So gold's up substantially this year. Gold is the closest thing to Bitcoin. Bitcoin's sort of the closest thing to gold. But I think Bitcoin has tremendous long-term advantages over gold. Again, the supply issuance for Bitcoin is completely algorithmic. The supply issuance for gold is largely predicated on how profitable it is to mine gold.
Yeah.
And so as the gold price goes up, they mine more gold. And so the cure for higher gold prices is higher gold prices, right? Whereas there's no cure for higher Bitcoin prices because there's no way to accelerate the amount of Bitcoin mining you can do just based on your desire to mine more Bitcoin. There's no other asset, in my view, in human history that looks quite like that. So yeah, over 10, 15, 20 years, I have zero concern about Bitcoin's monetization pathway. I just think people are in a rush and everybody claims that they're really a hodler and they're really long-term in orientation, but people also want to put food on the table and they want to buy a new car. And it turns out that not everybody wants to have one chair and one mattress, right? In their rental apartment. Like some people have kids and some people want to take a trip and some people want to retire from their job. And, there's a lot of shaming about that for whatever reason in the Bitcoin community, but I'm more of a realist. Like I know people are going to do that. So I always advise people buy the amount of Bitcoin that you can hold forever. So whatever that is, don't get cute and put 100% of your portfolio in Bitcoin and then try to decide when to sell to pay bills. I think that's wrong. It presents a timing challenge. You have to become a hedge fund manager. If you are a hedge fund manager, that's fine, but most people aren't. It's not what they do for a living. And you're asking them to become a hedge fund manager. Like you're going to have to decide which week, which month to trim your Bitcoin position to pay your bills. And I look at it differently, which is create enough fiat income with whatever else you do, own a business, own dividend stocks, bonds, whatever, and buy an amount of Bitcoin that you can sort of put in the vault and never sell it. Mm. You can choose to sell it if it goes to $1 million or $2 million or whatever. You can choose to sell some in the future. But if you're forced to sell it because you over allocated, then you're going to get yourself in a bad position. A lot of Bitcoiners disagree with that view, and I'm okay being sort of in the minority and being contrarian, but I'm pretty certain I'm right about that. I've seen way better outcomes if you remove the emotional side and the decision of having to sell. I've said a few times that like between 30 and 50% of my overall net worth is like Bitcoin and Bitcoin related assets. But keep in mind, it's really hard to do an analysis on private assets. I have significant exposure to private companies. Those companies, their last mark might be X, but I know the value to be Y. In one case, I'm selling a company right now. The last time we had a mark on it, it was like 20X ago, right? So when that actually sells, that'll be the real valuation and I'll take my cash back and I'll reinvest it somewhere else. And so because of the level of private exposure I have, it's really hard to like give an exact number at any given moment in time because I have to make assumptions about values that don't exist.
Examining Bitcoin through this lens, you begin to see it less as a speculative gamble and more as a structurally scarce monetary asset with long-term strategic potential. Its fixed, algorithmic supply, coupled with halving events, creates a predictable issuance schedule that no other asset replicates, making demand the primary driver of price. You can interpret the current sideways volatility as a deliberate phase where institutional adoption, treasury allocation, and evolving regulatory frameworks are gradually shaping a more mature market. Emerging sectors like DeFi, NFTs, and prediction markets highlight opportunities that go beyond Bitcoin itself, offering avenues for growth within a disciplined portfolio. By focusing on amounts you can hold indefinitely and avoiding forced liquidation, you position yourself to capitalize on structural tailwinds, turning market fluctuations into accumulation opportunities while preparing for Bitcoin's potential role as a global strategic reserve. Do you think Bitcoin's fixed supply and growing institutional adoption make it the ultimate long-term store of value compared to traditional assets like gold? Stay ahead in the crypto game. If this analysis sparked insights, don't forget to comment your thoughts, share with fellow investors, and subscribe for more in-depth Bitcoin and market perspectives.